Yesterday on the channel, we talked about BioNano Genomics. I went over their product goals. I went over a really deep and detailed company overview. I talked a lot about what some of their really, long-term goals are going to be going into the future here. I talked about a whole bunch of different things about this company. So if you are looking for an analysis, if you're looking for a quick overview of the company itself, definitely go check out that video. I'll put the link to it in the description below, but it should be the last video that I posted on this channel. In today's video, I did want to talk about the risks. Yesterday in the video, I said that I wanted to make sure that I went over the risk in another video because it was a little bit more in depth and there's some other details that I didn't want to leave out. And I felt like yesterday's video was getting a little bit too long. So here we are, I'm making another video on BNGO. If you guys are happy that we are making another video, if you're happy to see me, if you find value in this video, entertainment, anything like that, you can let me know by smashing that like button. If you are new to the channel and you do enjoy my content, again, if you find it valuable, you can let me know by pressing that subscribe button. I welcome every single person to the channel and I thank you for showing the support. And if you do have any suggestions for videos in the future, any tips, feedback, criticisms, anything like that, trust me, I take every single one personally and I do pay attention to what all you guys say. But with that being said, let's go ahead, let's take a look at some of the risks and let's see what BNGO could face potentially going into the future here. So one thing that I have noticed about BNGO or BioNano Genomics is the fact that they have a very, very strong idea. Their concepts and their ideas, their science is actually very fantastic. They have a lot of good things going for them. They have the hype, they have the management, they have all of these different things. But one thing that I am noticing is a super serious red flag is their financials. Now, a major shout out to Vincent Chan. If you have not checked out his channel before, go check it out. He has a super amazing stock channel over there where he talks about different stocks, companies, etc. But he pointed out a lot of the flaws in their company, a lot of the fundamental flaws that there are. So I made sure that I wanted to talk about it. I said it earlier today that I did want to go over this, and I'm going to make sure that we go in pretty good detail about the reasonings behind this. Now, I guess I will go ahead and let you guys know that I don't believe that these flaws are going to be a reason as to why just no one should invest. I personally may invest in this company. I have not yet. I might be missing the train. I might not be. I'm just kind of taking my time with this one. But one thing I will say about these flaws is that if they are not addressed, if they are not worked on and fixed by the management team, that this could be serious trouble for BNGO. I really do believe that some of these flaws that we will go over are going to be serious to the point that they need to be addressed now, especially going into next year with vaccines and everything coming out, with everything going back to normal, that they need to be addressed so they can keep up with the pace. So that's it. Let's go ahead. Let's take a look at what some of these fundamental and financial flaws are, and let's see what their financials are all about. So I do have their TQ pulled up here, and it kind of does just break down all of their fundamentals, all their financials. It just goes over 100% everything that goes in and out of this company capital-wise. Now, if we do go ahead and we take a quick look, it actually is pretty impressive. Their current assets have grown over the course of the year. Now, it has been a really rocky year for everyone, and so seeing the fact that their assets have grown from 17.3 million to 18.8 million, that is nice to see. It's nice to see that this company is growing their assets and growing out in that sense. So their total current assets are sitting at $29,240,000, which is going to be up about $1 million from this time last year. So honestly, I'll take any single growth that I can see over this year because it has been a rough ride for sure. Now, if we do go ahead and we look at the rest of the assets, the property and equipment, the intangible assets and goodwill, their total assets are $41.3 million, which has been a jump of about $11 million over the last, year roughly. So that is super duper appealing. That is one thing that I will say is pretty nice to see. That's, whenever you have a company who's this new, it is good to see that they are still growing. They're focusing on these things. But sadly, these assets and everything, this is not the issue. This is not where the flaws are located. The flaws are located in their revenue and their debt. Now, this is where it gets interesting, and this is where I see red flags on red flags on red flags, okay? So whenever we go ahead and we take a look at their revenue, cost revenue, operating expenses, loss from operations, and their net losses, we can see that there is some struggle for sure. So if we do go ahead and we take a look at 2019 and 2020 in comparison to each other, obviously their total revenue did decrease. Now, honestly, that is kind of understandable whenever you look at what is all going on in the world right now. That really doesn't shock me at all, especially as not a starter company, but a smaller company. This company, of course, they're not just going to have a whole bunch of cash that they can keep going and going and going. Of course, they're going to be hit pretty hard by something that happened like this year. Now, one thing that does somewhat offset that a little bit is the fact that their total cost of revenue did decrease a little bit. Now, that should be pretty obvious, but you would be surprised that there actually are some companies this year who spent the same amount of money as they did last year just to make less money. So the fact that they aren't spending as much and making a lot less, that's not necessarily a bad thing. That does show that there is some good standing there, but honestly, it's not the absolute best. Now, this is where it gets interesting. This is where it gets very, very interesting. And Vincent Chan pointed this out. It's something I missed. They're spending, as a company who's focused on genomics and a company who's focused more on the sciences, they're spending $2.3 million on research and development, but spending $8.6 million on SGA, or selling, general, and administrative. That's a bit absurd, honestly. If you want to, a little bit more in depth about other companies and what there are, I'm going to link Vincent Chan's video down below. I'm telling you, this video is absolutely amazing. But just in a broad sense, that's a little bit much. I don't really think that that's proportional. It should be a little bit closer. The fact that it's 4 times SGA over at R&D is really weird. So again, I'm not really sure who's running their financials. I don't know who the management is above that. That should be taken a look at, because that is not a great sign. I think there should be a lot more going into, the research and development. And so, of course, that is a red flag to me personally. But with all that being said, we are back on the charts and we are here. We're going to go ahead and look at the total losses and the total revenue. So if we're just looking at the 3 months ended in 2020, we can see that their net loss of everything combined was $10.7 million. And their total revenue is going to be $2.196 million. So that net loss per share, basic and diluted, is 0.08, which is of course what they reported in their Q3 earnings report. That's rough. That's pretty shaky. I know the predictions and the expectations was 0.05, a loss of 0.05 per share. They did not do that well. They did 0.08. But you can just kind of tell from that on its own that there is a lot of work to be done financially. The bad thing about that is it doesn't look like it's getting any better, because when we're going to go over a little piece that they released that's going to explain what I'm saying. But if you looked at companies like Tesla before it was profitable, whenever you looked at certain other companies before they were profitable, they had, this systematic growth that was going to get them out of being in debt. This right here, especially whenever you look at 2.3 million in research and development and 8.6 million in SGA, that's pretty sketchy. I don't really understand why it's at that proportion, why those ratios are that divided. I hope they release something about that or talk about it, because it is interesting. But again, I don't know. I don't really like that. I feel like their fundamentals and their financing is just a little bit off. I'm not saying I know what they should be doing, but I'm just saying that from the looks of it, it is a little bit sketchy. And so, it is normal for companies, especially when they first start, to not be profitable. That's not the issue. It's the fact that their financing is so weird and it's just so all over the place, and that these ratios are so off that it gets a little bit sketchy, especially for a company whose stock price is less than $5, because that thing can jump all over the place. And it's just, there are risks. There's risk, there's risk, there's risk, and I'm not ignoring these red flags. But let's go ahead, let's jump a little bit further. Let's go check out the article that they did release under this 10Q, and we're going to talk about the biggest red flag that I saw that makes me very nervous. The company has experienced recurring net losses from operations, negative cash flows from operating activities, financial covenant breaches, and significant accumulated deficit since its inception, and expects to continue to incur net losses into the foreseeable future. The company had accumulated deficit of $132 million as of September 30th, 2020. The company had cash and cash equivalents of $18.9 million as of September 2020. Management expects operating losses, and this is where it gets important, operating losses and negative cash flows to continue for at least the next year as the company continues to incur costs related to research and commercialization efforts. As a result, there is substantial doubt about the company's ability to continue as a going concern within 12 months after the date these financial statements are issued. That's scary. That's the part that I get nervous about. Whenever they say we're taking losses, we're continuing to take losses, we're taking losses because of our research and commercialization efforts, and there are doubts whether we're going to make it the next year. That makes me nervous, right? As someone who may be investing, that makes me say, okay, so whatever's going on, the debt, the everything that, the losses, the operating costs, the S&D, the SGA, the R&D, all of that needs to be addressed very soon. Now, likely, as this company does gain popularity, as they are starting to grow, they will more than likely address these things and hopefully work on those fundamentals a bit, because I personally do not like investing in a company with shaky fundamentals. A shaky base on a house is very sketchy. But one thing that I will say that could potentially help them with all going on at the moment is the fact that they are starting to get, getting noticed from some of these big investors. Of course, ARKG has shown open interest in investing into them, and I think that could be exactly what this company needs to continue this growth. I think that could be exactly what would help them out, having that, more invested cash to really be able to go ahead and take these fundamentals and grow and work on everything, because the fact that they're like, maybe not make it over 12 months and we're having doubts, that needs to be addressed for sure. So hopefully, when ARKG and, Kathy Wood and all of the ARK Invest team, whenever they do go ahead and decide whether or not they're going to invest in this company, as someone who may be investing in this company, I do hope and pray that ARK doesn't, decide to invest in them. That has been a lot of the hype recently behind this company, that ARK is potentially buying it or, investing into it. So I think that in a situation in which ARK decides not to, I think that could be very, very detrimental to this company. I don't believe that is going to go very well, and we could see it crash really, really hard. No one really knows. I mean, you see there's Vanguard. Vanguard's purchased a lot of shares of this one, and so hopefully that, connection and all of these different little things, their story, their amazing products, and look, their financials are sketchy, but their products and all that are still amazing. So hopefully all the good things do outweigh the bad, and ARK does want to go ahead and help out, invest in them, and really be able to be a part of this journey that BNGO is starting to create. I hope you guys did enjoy today's video. It was one that was really fun to make. I actually just got home from work, and so I'm a little bit, like all over the place. I'm really excited to be home, and so I'm really excited to be back talking to you guys. If you guys do have any more information, any news articles, anything like that, definitely let me know in the comment section below. It always helps me out. It helps me do my research and helps me do my due diligence to be able to bring these videos to you. If you guys did enjoy this video, again, you can let me know by smashing that like button and subscribing if you are new to the channel. I appreciate all the love. I appreciate all the support, and I will see you guys next time. Peace.